Hi, so this is Accounting Fundamentals. When I am teaching the concepts in accounting, I always reference the Southwest edition of the accounting textbook, 10th edition. So in this section, this is the second video after you've taught the students the accounting equation. So I always encourage my students to write on their scratch paper that they will always receive for tests and quizzes the accounting equation and their normal balances and the four accounts that make up owner's equity section of the accounting equation. So I always write this as an example for them to always write it on their paper. The more they write it, the more they say it, the more they use it, the more it sticks in their mind. Because remember, the goal is they must memorize these concepts. If they do not have these concepts memorized, they will struggle with upcoming um, lessons. So, in this lesson, we're going to talk about the fact that the accounting equation must always equal. Assets must always equal liabilities plus owner's equity. That's why it's an equation. So, we stress that concept here. And then we're going to focus on three new vocabulary words: transaction, chart of accounts, and on account. I teach on account as a vocabulary term. It is not in the textbook like that, but this is how I teach it to my students. I focus on teaching concepts, and my textbook is just a reference. Okay? So on page 14 in the Southwest edition of the accounting textbook is where I have them reference the term transaction. So I may have someone read it from the textbook. I'll read it for you. Accountants call any business activity that changes assets, liabilities, or owner's equity a transaction. That is the textbook explanation of a transaction. Accountants call any business activity that changes assets, liabilities, or owner's equity a transaction. So most of the time, I will tell my students, read the textbook definition. I'll have several people read the textbook definition, and then I will explain it my way. And I tell them this transaction is when there is an exchange of assets for either money or the promise to pay. Okay? So on page 14, there is not only the definition of a transaction, but there's also an example of a transaction. I may even ask my students to give me an example of a transaction they may have been involved in. I may even ask them, hey, have you ever been involved in a transaction? Some of them will raise their hands to say, I think so, maybe. And I ask them, well, have you ever spent any money? And they will say, oh, yeah. And like, where'd you spend money? A lot of them will say Chick-fil-A. I bought some shoes from Foot Locker, something like that. Nowadays, it's like I order something on Amazon. Those are all examples of transactions. You gave money, they gave you a product. That's a transaction. Went to Chick-fil-A, ordered a Chick-fil-A sandwich. They gave me a sandwich, I gave them my money. A transaction took place. Okay? So in the textbook, there are tons of examples of transactions. You can use all of the blue are transactions. You can use any of them to illustrate your points. Transaction number one. On January 2nd, received cash from owner as an investment, $2,000. That's an example of a transaction. Okay. Next, we talk about chart of accounts. So on page 3 in the textbook is an example of a chart of accounts. I use this chart of account example all the time. I have my students always reference page 3 in the textbook because that page illustrates a lot of important information. So I reference it all the time. I have them pull it up all the time. I look at that page all the time, and I have them look at the page all the time. So if you go to page 3 in the textbook, there's an example of a chart of accounts. But it not only has the chart of accounts, it has the accounting equation, it has the the financial statements we'll discuss. This is a very valuable page that I referenced early on so that the students can get the information in their mind. I use it as a foundation builder because once they've seen the page once, I can say, oh, have you ever seen this before? They'll go back to page 3 and it'll be there. So on page 3 is the chart of accounts. On page 36 is the definition of the chart of accounts. So I have the same thing, have them go to page 3 and I'll have someone read it. And I'll read it to you. It says a list of accounts used by a business is called a chart of accounts. A list of accounts used by a business is called a chart of accounts. So I have them read it. I may repeat it, have somebody else read it, get the repetition going from people saying it, them seeing it, them hearing it, using all the different learning styles because our students have many different learning styles in the classroom. So the more you can build into a lesson, the more students you'll reach. Okay, so a chart of accounts is a list of accounts used in a business transaction. So the way I break it down to them is when we are recording transactions, we have to group them some kind of way, and we use accounts to do that when we do transactions. So we always reference the chart of accounts when we're looking for the name of account to use for grouping transactions. And then we do on account. So on account is a little bit more, I explain it in a little bit more detail. But basically, I tell them on account means to pay later. Okay? Pay later. On account means to pay later. If I get the product today, I will not pay today. I will pay later. So cash is never involved in the initial on account transaction. Pay later. So the vocabulary that your students should know at this point is asset, liability, owner's equity, accounting equation, what accounting is, normal balance, transaction, chart of accounts, and on accounts. At this point, your students should have knowledge, be able to recall, explain, and give examples of all of those vocabulary words. Thank you.